Hi, ladies and gentlemen. Welcome back to the show. I'm your host, JT, and I'm joined always with Matthew McGregor from the Daily High. And this is Black Box Trading. So welcome in. We've got some stuff to talk about. Nothing particularly bullish from my side. Definitely, I mean, we could see some short-term bullishness, but overall, as we've identified and made clear in the private group, things are definitely at best cautionary. How are you feeling, Matt?
I'm feeling fine overall. I mean, this show was about allocating to altcoins, and I'll run through what we did there. And I'm pretty happy with that. But no, I'm not particularly bullish on Bitcoin in the short term at all. To be honest, no.
Do you want to run us through what you're seeing here? We just got the weekly close on Bitcoin, which just confirmed our flip from our bull market bias of the green wave to the red market bias of the bear market bias of the red wave. Do you want to run us through that?
Yeah, absolutely. I'd love to do it. So starting right now on the weekly time frame, as you can see, the modified Lucid SAR has officially broken and flipped. This happened earlier in the week at about $110,000 is when the wave officially turned red. If you don't know what I'm talking about, you can see this bullish, the bearish wave is in. Do you know? Like, if everybody watching the show already knows, what we do here on the channel. But just if you're brand new, if it's your first show, when the wave is green, we have a bullish macro mindset, and when the wave is red, we don't. And it doesn't have to mean a sell signal. It doesn't have to mean anything. It just means, when the best way to trade is like when we're in for Bitcoin, it's very, very easy to trade. When that wave is green, you're looking for longs, you're looking for longs, you're looking for longs, and that's a weekly time frame. But if you see on the shorter term time frame, you'll see all these little breakouts. A perfect example of that is this one back here. You can see this line that I've drawn in. We were in this trend, just a downward sloping bull flaggy type esque trend for weeks on end, and just a simple breakout of that line. I was bullish that time. We stayed above the 30 simple moving average, and on the hourly or the 4 hour, you can see that's a trade that will take 10 out of 10 times. I mean, and with a measured move of 10%, that's a great trade. Well, now when I look at the lower time frames, I'm not looking for breakouts because there's so much we have to do to get me bullish again. Okay, but it doesn't mean I'm not long-term bullish on Bitcoin or anything like that. I still think there's upside this year potentially on the cards, but as it stands right now, we would have to raise 15% for that wave to turn green again. Okay, and every single week, whether it's consolidation or further downside or whatever, this modified Lucid SAR will draw down. So hopefully, ideally we get back in at a price that's lower than the 110 that we got out of the price, but that doesn't have to matter. I don't care if I have to get back in at 116, at 120, and I sold at 110. That makes no difference to me. I don't want to be holding an asset when the wave is red. There's potential for way further downside. There's potential for let me just put this on auto for a second. This is worth talking about. There's potential for this situation, which happened, at the end of the bull market cycle where we went down. That thing changed at 60 and got as low as 33. We'll call it a 48% drawdown before it looked like it was starting to recover, and then it went red again, and we respected it, and it had another 50% correction almost, so you don't want to be holding for the off chance that it's just one of these ones where you're wrong. It went red and immediately went bullish afterwards. This is a prime example of where the wave, it looks like it's failed, but you didn't know that. It's only in hindsight that could have just gone down 50% for all we know. To get back in at a higher price made no difference because you were already in from 30, you got out at 42, you got back in at 47, and it rallied all the way back up to 70. Do you know what I mean? Like, you want to be buying into strength, not hoping that it doesn't go down. You know, that's not the way I trade. So I'm out of the market here on Bitcoin in my trading positions, and my hold positions are untouched. Okay, so that's where it stands right now. Any comments there, Blue?
Yeah, no, I totally agree. You know, I believe that the cycle is not over, but that's a belief. That's a bias. That's not a technical indicator. That's not the mindset that you should carry as a trader. Being a trader is identifying bias, looking at all of the different probabilities, looking at all of the different possibilities, and then assigning a probability to each outcome. And the probability that we assign when the wave is red to a bullish outcome decreases significantly. So the value of a cash position increases significantly. So I'm selling and I'm waiting to see what happens next. If we blast off here and take out the modified Lucid SAR at where it stands right now at 124,200, well, that's showing a shit ton of strength. And now I'm a buyer and I'm buying into strength, and I'm happy for the next leg up, because it could mean, you know, that quote unquote failed signal that you already displayed. It rallied, you know, 100% after that point. So I'm happy to buy at 10 or 15% higher. If it means that Bitcoin is truly strong. Right now, it's not showing strength. It's showing a lot of weakness. It's showing a lack of volume. It's showing a lack of follow through. And I think a shakeup would be nice. And I think that there's still a lot of complacency. So from a sentiment point of view, I think that there still needs to be a little bit of pain that needs to come into the market. A little bit of a capitulation. What's nice about capitulation is it shakes up the order books. It allows the smart money to take a position, because maybe they've been riding from 20K and they just haven't seen a good opportunity to buy. It allows smart money to buy. It allows retail to sell and make a mistake and then watch the price rally, and then they buy back in higher, and it just sets the stage for the next leg up. So I think that you know, it is what it is. The technical indicator that we're following is the red wave. I've placed action on that red wave. So far, we're right. We got out at 110. Price is currently at 108. Not a big deal, but it's looking good. We got a couple comments coming in. We got Smokey the Bear here Smokey Bear from Twitter. And he's saying this time is different. No alt season, no retail, no euphoria. Retail would rather play in the stocks. Do you have any comments on that?
Well, I mean, it depends. I think it's a perspective thing, because I had euphoria when we got to, well, you know, $124,000, because from the price that I entered Bitcoin, that was kind of euphoric. Maybe there was no euphoria from like the people who joined this cycle. Do you know what I mean? Who, like, I don't know. And like the altcoins, I think the altcoins did pretty good for a minute, better than I expected them to do. This was a Bitcoin rally. It was a Bitcoin bull market, and they had a little kick at the end. I don't think they deserve any kind of upside. And thirdly, I don't know if it's over yet. Do you know, like, we could be at 120 this week, and it's not over at all. So I think it's too early to say that. I think we'll need like 2 years to make that comment be definitive.
Yeah. I kind of agree with Smokey here that I agree with some points and disagree with some. So this time is different. I think that those are dangerous words. You shouldn't say that this time is different. I actually think that this time is very similar to what we saw in the 2017 cycle. I just think the cycle is a lot longer now. I don't think retail is truly here. We don't have the new cohort of individuals who's just buying it without knowing what it is. We didn't see, like, in the last couple euphoric cycle tops, people are just buying because they don't know. They're just, you know, fear of missing out. Like, they're going to buy before understanding what it is that they're going to buy. And we haven't seen that yet this cycle. But on the note of the alt season, and I've said this a couple times in the past now, I we are dabbling with the altcoins. That's kind of what this show is about, and we'll get into those alts in just a moment. But I have on multiple occasions already said this cycle, what if the altcoin season is in stocks? And what if the altcoin season is the Bitcoin treasury companies or the Ethereum treasury companies? And that narrative is getting stronger and stronger. That fundamental play is getting stronger and stronger, where, maybe it's not the traditional altcoin season that you've seen in the past, and maybe it literally is just an a bull market rally in the stock market. So for the traditional altcoin investor, do consider that. Don't completely ignore the stock market. Don't completely ignore what's going on with the Bitcoin, Ethereum, and who knows, we could see an XRP treasury company. We could see a Cardano treasury company. It could get really shitcoiny near the end of the cycle. Don't just hold the shit coins on chain. Look at what's going on in the stock market, because even in Bitcoin, we have a large cohort of individuals who don't hold Bitcoin, but they are leveraged to the gills with MSTR or IBIT ETFs. And I don't know really why. As you and I, we're very comfortable Bitcoiners. We're comfortable to hold in self-custody. We're comfortable to hold in cold storage, but maybe that is too hard of a technical bridge for many to cross. So they're resorting to just holding stocks because it's easy. It's connected to their Fidelity account. They can get it on, whatever stock trading app that they're trading on. I'm not exactly sure, but yeah, good comment there from Smokey.
Yeah, I mean, you might be right, Smokey. I just wasn't paying enough attention to the altcoins until we did this show. All right, let me finish off the analysis here.
Sure.
So I'm going to go through a few of the oscillators. Man, my call on this divergence on the RSI has turned into be an all-time great call, and I said that at the time, when we were up and touching on this line, I said, like, this is we might look back on this in 10 years and say, like, that was the best divergence we've ever seen, and so far so good. I probably haven't been bullish proper since I noticed that divergence in play months, like 2 months ago, and I said, look, until we make this line null and void, I've got to respect it, and it never got null and voided, so it's there, and it looks scary still. The copy curve has rounded right down. We're still above the zero line, but it's not pointing in the direction you want it to be pointing. The MACD looks dreadful, absolutely dreadful, like an all-time top, like it did there, like it did there. I mean, that's not what you want to see. The weekly doesn't show much. I'll show you what just the last thing on the weekly is Tonevase's MRI. That was a top candle warning back on the highest we ever got to, and a red star on last week's candle. It did pretty well in identifying that. They worked. MRI and Alphametrics work like hand in glove together. If you don't watch our show, that Tone's work is fantastic. This is interesting on the daily. We are on an MRI in a buy candle right now, so I can definitely make a case for a speculative case that we could have a real bad day today, and then that be the bottom for a great rally. I'd be looking for, if I was a really, really good trader, a potential buy today. If this thing dropped pretty hard, let's just say it dropped down to like 107, like $1,000 or lower, 105, it had a big crash, boom, like that. You might even get a green diamond, a daily green diamond on that. I would see a relief rally back to the 7 simple moving average, not a buy that dip that you would just hold indefinitely, but a really good chance to, let's just say it got to 105, okay? I could see that with a green diamond, with an MRI buy, and a 4 or 5% rally back to touch on that 7 simple moving average, but then the trend continue lower. I would be very cautious of that thereafter. The daily looks exactly, that's the only sign of life I see. This is what I said before on the weekly. The problem right now for me is that we've got so much now that the wave is green. It's so far to go before I get bullish again. Like, we're below all moving averages except the 200 here. We've got to get above the 7. We've got to get above the 30. We've got to get above the 50. Yeah, at 116, I'm very, very bullish. But that's a lot of resistance we got to break through for me to get bullish. Really, I've got to get above almost 17 for me to start to get really excited on the daily as it stands right now. However, just to reiterate, a bit of a flash crash, maybe inside the 200, below the 200 on a green diamond on this candle with a rally, sure, I can see that being a real possibility for a good short-term buy. 4 hour, same jazz, right? Look how far we got to go. It's the same point, above that 117 zone. But when we're below all the moving averages, they're all facing down. Yeah, it takes a lot of work to round this off, like to get us back looking sharp again. Like, in comparison, like, look at what we want to see. We want to see like this, the opposite, the inverse, when we're above all the moving averages, when they're all pointing upwards in the right direction, they're rounding up, the 200's rounding up. This looks like a cascading waterfall, bang. And every rally we're getting is doing the textbook for me. Getting stopped out at the 200, getting stopped out at the 50, at the 30, 50, or the 200, just putting in these lower highs, not good. Not good at all, my friend. All right.
No.
And on that bombshell, I'll let you go first, and then if you like, or I can have a look at some of these altcoins. What do you reckon?
I'll just quickly go over so I did put a pretty nasty price on today's thumbnail of around 93K, and I want to just I'm not saying we'll go there, but I want to kind of build the case and show you guys a chart that is food for thought, because we're looking at things through a bearish lens. Again, I'm not saying 93K is like that's where we're going. I'm not sticking my my flag in the sand and saying, planting my flag that at 93K, but I will say that that's going to be a pretty good opportunity if that does come to fruition. And as it stands right now, like we've already said, things are in a downtrend. Moving averages are tilted to the downside. We have not a lot of demand to carry us through. We do need some sort of high liquidity event, high volume day to kind of kick that trend back to the upside. Volumes are really, really low. So I'm looking at things kind of from a bearish lens. So I've actually just got simple moving averages, 3 different moving averages. I've got the blue, orange, and the green. They represent, and I'm on the daily chart, they represent the quarterly price. That is a moving average of 92. We have the 6-month price, the orange here, that moving average is 184. And then we have the yearly average price at 365. And traditionally speaking, this is going to be the health of the bull market. We already mentioned with bullish alignment, when the quarterly is above the 6-month, which is above the 3-month, the yearly, you're in a healthy bullish trend. And when the quarterly falls below the 6-month trend, you're not in a healthy place, and we're looking for a recovery. But kind of the point I wanted to make here is I'm actually just going to simplify this chart a little bit further and turn off the quarterly and turn off the 6-month and just show how the yearly average price has really been kind of that bull market support or bear market resistance. So as it stands right now, my chart's taking a while to load here, but as it stands right now, we're still in a bull market. Even if we pull back to 93K, we're still in a bull market. Now, I know that that's not what a lot of people want to see, and that's certainly not what they want to hear, but you got to look at this from kind of a higher time frame point of view. Bitcoin is a volatile asset. That's why you're here. You're here for the volatility. We were down here buying it at $15, $16, $17, $18, $20,000, and we've rode it all the way up to plus $100,000. So for those who are really in it, who have been in this market for a while, who have been in the depths of the bear market and were buying, you've been rewarded handsomely. And a move down to 93, albeit uncomfortable for the market sentiment, is going to be a really incredible buying opportunity, because look at how price has respected that yearly average price in the past. As soon as we get above it, the bull market kicks off. We come down, tested it, bounced off it, got another massive rally off of that level of, 100% down here, 200% off of here, like 65%. So downside potentials, I could see this going as low as 93,335 and still be bullish on that. And you can see too that when we lose it, if we go through the past, every time we lose that level, that's when the bear market is in full swing. That's when the capitulation event is coming in. That's when the massive opportunity of the weekly green diamond presents itself, which we're not going to talk about now because I don't think we're in weekly green diamond territory, but those are life-changing buys. The weekly green diamond has been incredible. But yeah, we're above it right now. So kind of giving you some bearish food for thought. Let's hope we don't go there. But if we do go there, don't be surprised. And if we do go there, be ready to take some action, because that would be, in my opinion, a very, very advantageous buy in what I believe to be a bull market, an extended bull market. I think we will continue to the upside from here. It's just how we get there that'll be the interesting part.
I love that, mate. I think that's terrific. I've never looked at this before. This is something I'm going to add to the arsenal. I think that's brilliant. That's brilliant.
All right, just catching up with some of the comments here. GG, capitulation events are great for capital inflows, which can take us higher after longer periods of accumulation. Obviously, there were not enough buyers at 118 plus levels. Well said. It shakes up the order book. It lets the sellers get out. It affords the opportunity for the buyers to get in. And then those people that sell buy at higher prices, and that's how you get that impulse to higher prices. So Gigi's also saying rate cuts historically have triggered short-term sell-offs. Yeah, we do have an anticipated rate cut coming from the Fed in September. We'll see how that plays out. It's only speculation right now. Maybe they cut, maybe they don't. Maybe they don't cut, and that's the capitulation event, because there is such a high expectation for a rate cut in September. If they decide not to, that could capitulate the market, which could end up being the buy the dip opportunity. But yeah, anything to add to that before we kind of go into the altcoin stuff?
No, I think that's pretty concise, man. 23 minutes.
All right. So if you guys haven't already done so, I'll just put a QR code up on the screen here. Definitely join the trading competition. It's definitely, I have never seen an easier trading competition to win where the prize is so high. There are small trading competitions all over the internet. You can find, I don't know, you can find you competing against 20 other traders and you might win $100 is like the top prize. We're giving away $5,000 and you do not have much competition at all. If we take a look at the leaderboard here, some of these traders are really good, but I don't want that to dissuade you from trying. We got first place at 134% up on the account. But when you look at the leaderboard, it ranks it by 10. If we go to 20, now we're at 0%. So these people aren't even trying. You're against 16 people. You have a 1 in 16 chance, if you are at all a decent trader at all. If you can, create a positive P&L, you have a 1 in 16 chance of winning $5,000. So
yeah, and
it's
you don't have
a big
to
opportunity. I think, as far as trading competition.
Sorry, mate. I mean, there's nothing else you have to do than what you were normally doing. You just register for the trading competition and just continue status quo what you're already doing. It's there's 70 days left, nearly 69 days left in the show. You've got plenty of time. You can come in on the last day and win this competition. I highly recommend you do so.
plenty of time left, 69 days left in the competition. And, you know, we have our own strategies. You're doing really well. You're doing a lot better than I am. We can no longer look at your portfolio on CoinGecko because Matt is actually short a lot of his assets. 4 out of 5 trades that he was in, he's now flipped short and holding about 20% of his position in Tether. But overall, you're at $6,200. You started with $5,000, and we're in a bearish trend, and you're up to $6,200. We can go and take a look at those individual
25%.
trades.
20.
Let's take a look at the individual trades here and just see how we're doing. Yeah, so Link, you're up 15%, 15% on Chainlink in a short position. Doge, you're up 8.52% in a short position. XRP, fucking killing it, 81% up on your XRP short.
Nice.
And it's funny too because XRP was one of your early winners too when you were holding the spot position. So just killing it on the XRP trade. ETH, not much. ETH's been doing solid. I think there's a delay in kind of the capitulation in alts, and ETH has certainly been showing a lot of relative strength in the market overall. So I'm not surprised to see this be your weakest short, but still up. And then when we take a look at mine, and I'm going to dive into my reasoning in just a sec, I'm down $500, down 11%. When we compare that to Bitcoin, so I've decided to hold for now. I am expecting still be a rally in alt, so we'll see how that shakes out. I can be totally wrong.
Days left, mate.
What's that?
70 days. 70 days left is a long time.
Yeah, we got plenty of time left. When we compare that to the Bitcoin comparison, so this was always a Bitcoin trade for me. Now, Bitcoin's down 9.5%. My portfolio is down 11% or 12%. So yes, I'm down in Bitcoin, but only by 3%. And I do think that there's going to be a little bit of a recovery in the alts, and I'll go into that, I guess, right now. So for the price of Bitcoin, like you said, on the shorter term, we are looking at a potential MRI buy with what was the other thing that you were looking at? It was an MRI buy with
potentially
an alphanumerics green diamond, on the 4 hour. So I do think that we get a little bit of a rally. Like you said, a 5% move in Bitcoin, it's not going to be a massive rally. I think it'll just be a little bit of a recovery as maybe some shorts get liquidated. But I think that the alts are going to carry forwards, and that's going to be kind of my opportunity to take an exit and maybe play with some shorts on the altcoins. But yeah, so that's kind of my play right now. And my reasoning for that is Bitcoin dominance is still falling. So usually what you see is when Bitcoin's falling, dominance is climbing. People retreat back into Bitcoin. But the alts, for whatever reason, they've been showing a lot of resilience here. And I think that the alts can hold this level and really kind of show a little bit of strength, albeit short-term strength, if Bitcoin shows any sort of relief. So that's kind of the move that I'm looking for. As long as this chart is printing red candles, I feel okay holding my altcoin position, because what it means is Bitcoin's losing dominance against the alts. And in theory, I should be stacking sats. Down 3% in sats currently, but I think that the alts will play a little bit of catch up here. So that's what I'm counting on for this rotation here. As long as, if this was shooting up, if this was a big green candle, I'd be cutting the losses and getting out of the alts. But as it stands right now, I'm going to hold on to them. And, in the past, alts will kind of, if Bitcoin will reach kind of a local top, and the alts will reach their top like anywhere from 2 to 4 weeks later. So we're in week 3. I think this will probably be the deciding week. If this week is going to be green, I think that'll be a good time for me to exit the position in alts, or we just nuke and my portfolio gets wrecked, and it just becomes easier for everybody else to win the competition. But
can I say, Gigi just brought up a fantastic point, and it's something I've been meaning to talk to you about. It. The Bitcoin dominance that you're using right here does in fact include stable coins, which is it can blur the statistics. People like as Gigi rightfully put out here, a lot of people piling into USDT is actually changing that dominance structure. You can find other charts that take out the stable coins, and I think that you'd find it they're not looking like this.
Yeah, so I am aware of the fact that Bitcoin dominance is showing stable coins, and I still want to reference it. And the reason is it's a little confusing, but I think that the whole reason the US, now we're getting tinfoil hat conspiracy speculation, but I think the whole reason the US is crypto friendly and Bitcoin friendly is to perpetuate Tether. I think that, Tether is the seventh largest US Treasury buyer in the entire world. And they're the only company, they're the number one company as far as Treasury buyers. All the other six buyers are sovereign nations, they're countries. And I think that the US is just trying to sneakily penetrate different economies with Tether and flood the world with Tether and US denominated assets, while Tether is being one of the largest, most powerful buyer of US treasuries. Why I think that that is important is I think a lot of that liquidity will go into crypto-based startups and crypto native assets. And I think the injection of Tether will positively affect not only the sentiment in Bitcoin and crypto, but positively affect the funding of these startups and these shitcoin companies and these shitcoin treasury companies and all of that mixed in. I should start referencing a chart that doesn't have the stables as well. But the reason that I do pay attention to market Bitcoin dominance against all assets, including the stable coins, is I do think that stable coins do represent kind of the lifeblood of the shitcoin world. It's a very fiat minded world. So if the stables are increasing in dominance, I think the shitcoins are increasing in dominance as well. So that's my thought process anyways.
And just to add my 2 cents, the fact that I never really paid much attention to dominance before we did this show. Like here and there, I used to look at it, but I didn't trade altcoins, so I didn't care. But looking at the way that you had done this analysis with this channel, and like you really won me when we came and touched the bottom of that channel, and then you said you're looking for a relief rally bounce to the center of that channel to enter our positions. That did it for me, because whether or not you can point to where I was talking about here, that for me, like you nailed that. And like looking at how well this represents, including in the Tether and everything in there, I think that it's relevant. It's relevant. It's relevant for charting.
Yeah. It's relevant. It may be clouding the waters specifically for alts. So you're right in that sense, Gigi. But I do like to reference it, including the alts, because I think it's just an overall health check of the space, because there is quite a clear distinction between Bitcoin and crypto. And I think stablecoins are a massive part of crypto.
Yeah, and we're referencing it to trade Bitcoin, so it looks good to me. All right, would you like me just to quickly, if you've got nothing else, I'll quickly run through those positions I took and why I did them, because I think it's a really good lesson.
Sure. Yeah, I'm switching over to your chart right now.
All right. So this is another great reason, guys, to jump into the Discord, because I posted all these live. I posted them in advance of what I was going to do. Okay. So let's just again, I'll just reshape this screen. I don't like that. That's all.
Oh.
All right.
Oops. Hold on.
Well,
my bad. I was clicking buttons on the wrong screen. You're back. We're good.
All right. So back on we'll just say it was Monday, the 25th of August, we had dropped down, And that at that time we had lost the green wave on Bitcoin. So I suspected Bitcoin was going to struggle from that point. So I was long all of those altcoins, and I was up about 5% across the board with my 5 shitcoins that I had entered. And I just said to Baloo, who I used him as my broker, I said, I'm sending you 5 screenshots with this black line put in it at all these different prices.
Zoom in.
Yeah,
I don't think we're close enough.
Right. So we were down here. I said, I put a black line in 5 different charts screenshot. I said, sell all my long positions right now, and then at the black line, I want you to put shorts in on all of these positions, 2x leverage short positions on all of these positions. And Baloo's thought it was crazy. This is the Sui one starting. This is the Sui one, and look at this. This pisses me off like you would fucking believe. How close did that get to getting triggered and did not get triggered? So that is,
and it's one of the ones that fell down more too, just to add insult to injury. Yeah,
no, it's a 0.2% off. Like, I don't want to talk about nominal value, but I mean, had that one had got it in, like right now, I'd be, it's only 20% up. I'd be 20% up on that trade.
Yeah,
but I mean, it all helps.
XRP trade, I guess.
It's no XRP trade. But look, I had the right idea. I just got a little bit greedy. The ETH trade, this one, it was back here. It was back here. Sorry, it got above the price on the next day. So I was in a loss back there, and then it's come back down. Yesterday, it got back up to my price. It's not really doing much. I might actually look at just closing this one off. I don't know if this is going to be a real big winner long term on the short side. The league trade was terrific. Once again, I was in minus profit, but it came back up to the spot, and now that's looking really good. The XRP one, which is just really nice here, same deal. Came up, got into my price, and now we're falling really well. And the Doge is just the same. So what was the logic? They're all the exact same trade, and they all worked. And I include the Sui one working because in theory it was the right idea. I just missed it by 0.1%. The idea was when the wave turned red, I thought 2 things. I thought Bitcoin will have a relief rally because we've just dropped really hard, really fast. I think that we'll have a relief rally back to touch on the moving average clusters. This is on the daily time frame, and then we'll hit the moving averages, and then we'll fade, and then the bottom will fall out. And we're still in that process now. It hasn't come to completion yet. This is Doge, but I'm seeing a triple bottom here. I'm seeing the bottom falling out of this market. So I wanted a short position put on from a throwback rather than just the current price we were at. Had I been too excited, this is going to go to zero, this is going to go to zero, all of these trades would be in either minus right now for me or almost break even. I wanted to capitalize on the throwback. And as I bring up Bitcoin, you can see the same time frame, the same thing. We broke that wave back there. I wanted the throwback to the 7 simple moving average, and then I wanted the back to break, which has happened. So coming back to you now, Blue, I think there's a good lesson in that, to not just, even if you have a trade on, if you're short or if you're long, don't chase the price. Wait for the structure to be exactly where you want it to be.
Yeah.
And then you can really load up.
Often certain price levels will hit that will change your bias. It will flip you from bullish to bearish or bearish to bullish. And what a lot of new traders do is they will the bias will flip and then they'll initiate an order. That is wrong. What ends up happening when you do that is you're shorting support and you're going long at resistance. And if you're adding leverage to something like that, that's just a recipe for getting wrecked. We do teach a lot about risk management and positioning and how to set limit orders in the private group. Again, all of that's for free. All you got to do is just scan the QR code. And we'll get you in today. But yeah, you don't want to be shorting support. So even though we became bearish, we were looking at this, and when a new trader is looking at it, they're watching the candle flirt with support and they're like, oh my God, it's falling out of support. I got to go short. No, you don't. Look at the moving averages above. Look at where they're clustered. Look at where there's confluence between the 7, the 30, and the 50, and place an order somewhere up there, because 9 times out of 10, it'll go up there. So 9 times out of 10, you will get a great entry. Sure, sometimes the floor just falls out and you're like, oh, why didn't I short? But those are rare. Those are really, really rare. And when those happen, you just got to say to yourself, okay, well, I missed the trade. Whatever. There's next trade. It's fine.
Just bring up my charts again, and I know this is going into a long show, sure, but this is the lesson of the day. All right, I want to show you something that now the seasoned traders will know this and still not do it. That's the irony of it. Like, you guys are watching this going, yeah, I know. And like, ask yourself how often you do it. Ask yourself how often, like, okay, this is this here. That's the bottom. We rallied. We came back to the bottom again. Oh, it's a double bottom. Bang, I'm buying the breakout. Okay, great trade, right? Great trade. But you missed that, right? You were asleep. Bang, we already broke down. Fantastic. We're dropping. This thing's going to $6. Okay, I got to get in here. This is where you stop yourself, because we are very, very far from the moving average right now. We've already had the move that you missed. Okay, so you are still short. Your buy is short. The waves turn red. You're convinced this is going down, right? But how many times, ask yourself, do you enter this trade? This is the easiest trade in the world. 10x leverage from right here, and then here you're minus 30% and you're fucking freaked out. Oh no, I was wrong. This is just this is a fake out. All right, I'm long. Bum bum. Oh shit. Do you know what I mean? Like, so what do we look at here? Okay, we're very far from the moving average. You missed the breakdown, the easiest trade ever. So look where we set the short order back to the moving average, and wouldn't you believe it? Also, the point of breakout, confirmation that we're of a bearish signal. The breakdown, the throwback to the breakout, the breakdown point, the moving average. Now your money. Lesson 101 for traders.
Yep. Well
back
said.
To you,
all right, let's wrap it up. Yeah, if you guys haven't already done so, scan the QR code on the screen. We'll get you into the Discord, and definitely scan the QR code for joining into the trading competition. I'm not being hyperbolic. I know I sound like a freaking used car salesman when I say this, but this is honestly like one of the easier trading competitions that I've seen out in the wild. It just so happens to be ours. You have a 1 in 16 chance of winning $5,000 in this trading competition if you are at half a and it's not based on dollars, it's based on P&L. So if you can get a positive percentage on the account, definitely take advantage of that. It's just one of the easier ones to win, and we're probably making a mistake in giving such a large prize away. So take advantage of us, because that's the reality of the situation.
Well, I mean, you got to come and beat me first, and I got the hot hand, so come and test me on.
So come and check it out. Thanks for joining into the live stream. Don't forget to do all the things. You know what to do. You're not new to this stuff. Like, subscribe, all that stuff. And until next time, we will see you guys. Trade safe. Have a good one.